Hello, this is Tim Odom with Leading the League, the video series in which we talk to interesting individuals across the automotive aftermarket about things and trends that matter to your business. And today we're talking to the team from Fifth Third Bank. The AAM Group has known Fifth Third for quite a long time. They're very active at the PRI show, more recently the HPX show, and as a bank, they're unusual in that they have a motorsports and automotive aftermarket division. Imagine a bank doing that. So today we have two members of the team here from Fifth Third. We have Lewis and we have Mark. Could you introduce yourselves?
Absolutely. Thank you, Tim. Lewis Ketron. I'm a Treasury Management Officer with Fifth Third Bank. My role is to consult with clients as to their cash flow and money movement needs, account structure needs, and really just work with them as to how they can grow and embrace new technologies and solutions to help drive their business. I partner with Mark, if you'd like to introduce yourself as well.
Good afternoon. I'm Mark Vertreese. I'm a Treasury Solutions Consultant, and I work with folks like Lewis, really just to make sure we're asking the right questions of clients and prospects to help them really achieve their payables needs as best we can.
Okay, well, great. Thank you for joining us today. So to just sort of set the stage here, as credit card fees have continued to escalate, especially with some recent changes made by Visa and by American Express, so businesses are beginning to question whether credit card processing is affordable for them to take anymore and whether it's the only option they have. And many small business owners are aware of ACH, but they may not really know how ACH operates and what it could mean to their business. So first, I would like to ask, could you explain what ACH is and why it deserves a closer look for some businesses today?
Absolutely. So an ACH, which is Automated Clearinghouse, is a payment that essentially moves directly from one bank to another. So it's an electronic payment. It generally settles within 1 to 2 days. And really what it allows us to do is transact directly from account to account. Those things are able to be done outside of a third-party processor. So it really gives us some freedom on the banking side to control the transaction.
How do ACH costs compare to credit card processing for small, mid-sized business? Are there advantages besides lower costs?
So cost is definitely one of the appeals of ACH. It's significantly less expensive than other modes of transactions, paper processes such as checks. It's a significant reduction in cost switching to an electronic media. Where we really see the most benefit on cost reduction is that conversion from check to electronic ACH, electronic transfers. When it comes to alternatives like card, it's the surcharges that people are really starting to see. Either they're trying to pass along their receivables processing costs, or they're receiving surcharges when they try to make a payment as well. ACH solves that by going directly bank to bank. There's no third-party processor there. And again, it's probably our lowest cost solution. Banks typically include a certain volume of transactions at no cost, and above that volume, transactions are extremely low cost versus other things. The big thing there as well is ACH is per transaction, not a percentage of transactions. So maybe you're only paying 1% as a surcharge, but on a $100,000 transaction for a small business, that can be way too much. An ACH with a flat, 25 cents per transaction fee is way more economical for a small business that occasionally engages in large transactions.
And Tim, if I may just add one more term at the risk of shooting, card business in the foot, there's something called interchange that is the cost of doing business, right? So a client at SEMA who has the ability to accept a card as a form of payment, they have a merchant services relationship with their bank. So they know that the cost of doing business by card is what we call interchange. It's anywhere from 1.5% to sometimes 4%. So that really plays a role, along with folks who are beginning to see surcharging in the act of accepting a card for payment really becomes detrimental, and it can become cost prohibitive based on the size of that expenditure. And that I think, Lewis, to me, that plays a lot into why ACHs can be very attractive to folks as opposed to card.
And I can tell you in our world, there's a lot of wholesale transactions. We see surcharging as something that may be even attractive in a retail environment. A retail customer can understand that there is a cost for that merchant to accept that card. But typically in wholesale distribution, surcharges negatively impact the margin for the buyer who's going to resell that product. And so they're adverse to paying a surcharge, understandably. But at the same time, their supplier may have an issue, as you said, Mark. Surcharges can run on a business card, can run well above 3%. That's a significant impact in a wholesale distribution marketplace. So, Lewis, did I understand basically ACH? I used to think of ACH as primarily best suited for large transactions, but at that cost, it's really suitable for just about any size.
Exactly, and to Mark's point, we do see a lot of commercial card business shift to ACH due to surcharges, especially in those small to medium sized transactions. Really, what you're talking about there is adoption rates. Some companies don't want to accept ACH, or they don't have capacity to send ACH, and that's really where partnering with a financial institution, or your a lot of companies shifting to enterprise resource platforms that have ACH and payment capability. That's really what we're starting to see kind of in the small to mid-sized business environment, is people looking for those transaction options. I think that we're going to continue to see that, and as ACH settlement times improve with same-day ACH options, there's really been kind of a widespread shift to that transaction type.
And you mentioned same day ACH. I know one of the things I've heard in the past is that ACH transactions can take longer than a credit card in terms of receiving money into your account. Is that a myth? Is that a misconception? Is that true, or has that changed in recent years?
It definitely has changed. ACH settlement times, typically for a standard ACH, 1 to 2 business day, next business day is very common. The time of day that you send the ACH is a factor there. There's different windows throughout the day, and these items are batched and received in batches by other banks. So typically, if you were to send a transaction as a same-day transaction before noon Eastern Standard, it would settle in the recipient bank by their end of business, 5 p.m. After that time, it's generally received by them at end of day, which is dependent on the bank, 10, 11 o'clock at night. But a same-day ACH is still a fraction of the cost of a paper check. It's still significantly less than a wire, 10 times less than a wire. So that type of transaction is replacing a lot of the normal methods of exchange.
So, you talked about the fact that this is a different type of experience for a sender, maybe for a receiver if you're not accustomed to doing this. Mm-hmm. You talk about the value in a bank partner. What should a business person be prepared to ask their banker when they go in and talk about moving into doing ACH or doing more ACHs?
So asking the bank partner, obviously, what's the cost, right? What's the real cost? Typically, you'll see some sort of tiered pricing with ACH volume. Some of it may be relationship dependent, and those would be the things to really clear up. What's my real cost going to be? And also just familiarity with the process itself. Do I have access to make and receive these types of transactions? Am I getting the remittance information that I need to be able to reconcile my books at the end of the day versus just a line item? Those are the items that are very important. And you can tell I've worked in wholesale distribution myself. Being able to figure out where the money came from is just as important as getting it in. And those are the sorts of things. There are a lot of information that can be sent with these electronic transactions. There's a lot of files out there, but having the correct information. Again, ACHs are very low cost when done correctly. If you're sending information, let's say I'm sending an ACH to Mark and I put the wrong name or a misspelling of the name, I'm going to get charged because the other bank can't process that transaction correctly. So there are, I won't call them hidden fees, but there are fees around making sure your files are correct. So where it really shines is recurring transactions, repeat customers. A lot of our a lot of our services for receivables and payables are built around automating that process, keeping it clean, and that's really where the savings shine.
You just you hit on something, Lewis. Our accounting person here has had multiple situations in which an ACH comes in, and we don't know why, because there was a lack of documentation or correct documentation with the ACH. So that remittance information is a nice key feature for a best practice. Are there any risks, liabilities, or any potential concerns? And if so,
When we have a transaction method like ACH, the window for a return is much shorter than, say, a card dispute. So typically, it's a more secure way to receive payment as well. You see less chargebacks, less fees associated with that. Money stays in the account, but that is still a risk. An ACH can be recalled, but again, the window is tighter, so it is safer, but that is still a risk. The other piece is once you have the ability to send money out of your account directly to another account, that opens up the door to a lot of exposure. You are still exchanging account information. You still have to collect authorization, so there is some liability there. But more importantly, understanding that the email you received last minute on a Friday saying, "Hey, can you send it to this account?" Did you vet that out? Did you understand where that came from? Social engineering, phishing, scams, that is what we see every day. Educating people on that exposure is a top priority across the board. So understanding how to protect your account with this form of payment, how to review things, there's a learning curve there. Absolutely.
Yeah.
I can tell you with our bank, we have a 3-step process. Whenever our accounting team submits the ACH, they copy me on it. I have to reply back to the bank approving it, and then the bank calls me and verbally gets approval before it's sent. And it's a little more cumbersome, especially if you're doing a lot of payments. But we establish that level of security just to make sure that those kinds of things where there's this email comes in and a request for payment, and how did it manage to get through? You don't want those things to occur.
Yeah. Lewis and I always say if criminals could only use their powers for good, we'd be in a better position. So I like that safety that you guys, the protocols you have. Very good.
I think we're going to see ACH adopted more broadly, and I'm sure as we do, we'll see banking practices become even tighter and more comfortable for businesses that maybe haven't been using it up to this point. Gentlemen, I want to thank you for your time today. I appreciate the chance to learn from you more about ACH, and we thank Fifth Third Bank for allowing you to come be with us. And who knows, we may see you at the HBX show coming up in June. So thank you.
Great. Thank you.
I appreciate it.